Yeah, the supply chains are something we've been watching pretty closely. We don't have a global measure. What we do is we have to look at the components. So we know, for example, in the last couple of months that shipping costs have been falling, especially from Asia to the US. Some of the backlogs are improving and delivery times are getting better. Our analysts on the ground are saying that it's going to probably be most of 2022 until we get back to normal. But recent developments in China and the potential closing of the ports put some downside risk to that. So again, we don't have a sort of composite immediate measure of the supply chain stress, but I would say that this is going to slow the improvement we've been seeing over the last couple of months.
All right, what are you penciling in terms of expected stimulus then?
Yeah, well, stimulus, in terms of China, we know the authorities recently cut rates. They seem to have a higher tolerance for more moderate growth. We've penciled in growth the next couple of years at less than 5%. And I remember during my Asia days, it was more like 7 to 8%. And the focus is obviously on reining in financial excesses and the property market. But we'll have to see what the reaction function of the Chinese authorities is. They've been struggling to get the household and consumer sector going. So if growth falls too far below their target, we're gonna probably see some more stimulus out of Beijing.
Paul, do the supply chain disruptions potentially that we are seeing in China, do they have global ramifications?
Yeah, absolutely. If I think the first one would be unhappy consumers, but also inflation, right? Since the bottlenecks seem to have driven up prices, and we know that the three components of inflation we've been watching have been energy prices, supply chain related prices, and then just plain old domestic core inflation. And disentangling all of those has been a problem. But two of the drivers we've been seeing that are kind of largely outside of the control of most central banks are energy price inflation and supply chain inflation. There's not much the Fed or anyone else can do about getting the supply chains unclogged. So this is going to complicate monetary policy and keep inflation a little bit higher than it otherwise would be. And policymakers will have to identify that and look through that to set monetary policy properly.